Hi everyone, it's Stuart here again. It's Wednesday. It's the middle of the week. It's absolutely miserable June day in London today. It's if I could turn the camera around, I'll show you out the window, and it's just miserable. It's grey, it's wet, it's damp. It's anyway. You're in the best place. It's ECB day. I don't know if the weather's much better in Frankfurt. It looked okay actually, and I saw a glimpse of it earlier this morning. But Miss Lagarde, very much in focus this afternoon. Really, the the statement is going to get poured over. Obviously, the market's priced in a 25 basis point cut. They've been talking about another 25 basis point cut today. That's all priced in. The euro's been doing very well, particularly against the dollar. Dollar remains very much under pressure. Sterling's up this morning. Our trade from was it last night? Yesterday. It was this time yesterday, wasn't it? That's in the money. The guppy trade was stopped out yesterday. We jumped in on that one a bit too early. But yeah, ECB. So the statement and anything that comes out of the press conference of the half an hour after the statement as well. So whether I'll still be around for that, it's still 45 minutes away. You don't want to be listening to me for another 45 minutes to see if nothing's moving. But I'll be drilled in. I'll be locked into what she's got to say. We've obviously got the other thing we've got going on in the same time frame is obviously the weekly claims out of the US as well. Today as well. So remember we had that rise to that 240,000. We saw the weakness in the US data yesterday. We saw the PMIs particularly weak. ADP, 37,000. It was supposed to be 111,000. So weakness in that data yesterday. It held stock markets down. It closed more or less flat yesterday. The US stock market. Yeah, I was just looking at the actual cash market here. The S&P 500 was up 0.44 of 1 point yesterday, closing at 5970. Tesla got hit yesterday, and crowdsource also got hit quite significantly yesterday as well on the stock side of things. But yeah, lots of data this week. It's the beginning of the new month. Obviously, we've got the key jobs tomorrow, non-farm payroll, but ECB very much in focus. And I say Miss Lagarde, what she's got to say, and also the leader of the German central bank, Thomas Moders, also got a speech later on this afternoon as well. So lots in the melting pot today. Politically, as far as the markets are concerned, overnight we've had obviously Trump talking about banning more people from different parts of the world that he doesn't agree with politically. We had that surprise call yesterday between Putin and Trump. Putin obviously looking for revenge. He looked really dicked off, didn't he, about what the Ukrainians had done? What a coup those guys have pulled. Them more information that's getting leaked from, not leaked, but released from there. I mean, what an absolute coup. And also, we got NATO meeting as well. Obviously, the defence of the North Atlantic Treaty Organisation. Everybody wants to hang around that. The UK getting pressured to increase its. They've committed to 3%, but NATO's are saying they're going to have to come up with 3.5%. Obviously, the frontline states, places like Lithuania and Estonia, are talking about 5% overall of GDP committed towards defence. Changing regime in Russia, not part of NATO's remit, but whether that would change much, who knows. But anyway, let's stay away from that. Obviously, we've got chatter. And again, just on the political side of things, we've got the new German leader, Mr. Merz, is actually in the White House. Let's see how Mr. Trump and co deal with that theatre. And also the key Japanese trade negotiators going to Washington as well. I think it's today or maybe tomorrow as well. But yesterday was that Wednesday, and Trump had talked about final not deadline, but a deal day. Basically, the 50% tariffs on steel and aluminium came into effect yesterday. Canada getting very, very twitchy about that as well. So it's just more animosity floating around. It's more uncertainty. It's more friction to global trade. I don't know. And was clearly Trump and his team have their political agenda to push through, and are sticking to it. So you got to give them credit for that, I suppose. But in the meantime, the dollar is getting clobbered. So if we just have a quick look at the charts, I've got sterling up here first. So we're long this from yesterday. I might pull that target down a wee bit. I'll have a look at it, but it's an end of day one. I certainly might pull the stop loss up, but we're in the money on cable. If we look at the 4-hour chart, if we look at the daily chart, you can see, the there we are. We're continuing to hold and now rotating nicely. The gap there, the big purple line on there is the 135 area. These are 3.5-year highs for sterling here against the dollar. So obviously profit being taken at 135 initially. So we're long from obviously yesterday from that, but understand why people are taking some money off the table ahead of this key decision from the ECB, but we're still long that, and that's looking quite good at the moment. So this weakness in the dollar is persisting. If we just pick with the Aussie's back over that key. Other key line for the Aussie is the 65.65 area, so that's at a key level. It's it's only 10 pips above it, but again, not as strong as the sterling. But Aussie holding up. This being fantastic support from the 20-day moving average here throughout all of May, and we continue to push to the upside. Canadian dollar under 137 again, and pushing to the 136.50 low. We obviously had the Canadians holding rate yesterday, and we are continuing to move lower here. And again, if we look to the left here on this daily time frame for dollar CAD, we're back to levels we were at last October. You can see there's a bit of a next support area takes us through there, back to the round 136.000. You can see that from the resistance here to the upside we had from October, and there's the trend remains down. So we've still got a pressured dollar. As I said yesterday, the dollar index itself is down over 8.5% this year. I think it is off the top of my head. I haven't actually got the dollar index here, but it's under 100. It's still relatively high in historical terms, the dollar. So there's some leeway in there, but we've got this bid on the bond market, the US Treasury bond market, which is driving things as well. So dollar pressured against the CAD. Swissy, remember, was that big move of remember the chart we shared yesterday, 7.5% move in the Swiss franc this year, and that .81 area for Swiss franc can't be ruled out again. This low we got to at the end of April. So we continue to move now. Sorry, somebody's messaging me on. That's my old colleague, Adnan. Good afternoon, Adnan. Hope you're well, my friend. Family's well, I hope, and the wife doing okay. Hope you're well and staying good. So yeah, Swissy down, yen 143.25 to the downside here. Sort of bouncing along at this low level as well. Dollar against the yen. So main play today is obviously the euro, 114.24 at the moment. A bit like the sterling chart. It's been bid. It's more reflective of the Aussie chart, that isn't it, than the strength in get rid of that. The strength in the in sterling that we've seen. So let's pull that down. Let's get rid of that. There we are. So yeah, bid the 20-day moving average down there now, 113.30. 50-day is pushing up here to 112.42. So it's over the 112 area, and it's been trending higher. Again, like most of the weakness in the dollar for most of the month. We're not at a 3-year high against for the euro against the sterling here, against the dollar. We are with sterling, but 115 certainly can't be ruled out to the upside if we continue to move higher. See what they've got to say today. As I say, the main thing today that they will move to cut rates. They're aiming. They've been talked about this key 2%. Level for I think we might see it, but on can we see it? Yeah, I might see it. Yeah, there we are. They've been talking about getting to this 2% level sooner rather than later here for the ECB, and we're down to 215 today for the main MRI numbers. So where they go from here, a bit like yesterday with the Bank of Canada, the market was focused on what would happen in the next meeting, the July meeting. Here, they've, as you can see here quite clearly, they've moved every single meeting. They're moving again today. So will there be a pause next time? We wait till September, October time. Obviously, the real data, the impactfulness of the real data, the real data impact of the tariffs will starting to bite in the real data as we start coming through. Even tomorrow's non-farm payroll is a bit sort of skewed away from that, but it's getting to the point now where that hard data is starting to take account of the tariffs, and there hasn't been the big move many of the pessimists were saying. So the soft data obviously fell off a cliff, and the sentiment data fell off a cliff with regard to the uncertainty from the impact of the tariffs. But this sort of chaotic sort of flipping and flopping, it's on, it's off, it's not on, it's still on, but I'm going to delay it for 3 months or 30 days or 2 weeks or whatever it is, whatever who's ever been in his ear in the last hour or so seems to be how some of this policy is being perceived to have been sort of thrown together. Obviously, he has his plan, he has his red lines, and then there's all the other geopolitical things he's trying to push through as well. So obviously a lot going on, and he's trying to push through. But he's not. He's got nothing to lose. Trump. He's not. He's not going to change the constitution to stand for a third term. That's not going to happen. I think he's even said that himself, hasn't he now? So he's on a rush. He's only got 3.5 years left. There's all this fuss with getting this big tax bill through, which is struggling at the moment, but it looks okay. It looks like he's going to get his way. And next November 2026, all of the House of Representatives are up for grabs. So they're putting a lot of their reputations on the line on that one. So it's all very, very much in the mix. But anyway, here in Europe or over in Europe, 2.15% for the main rate is expected today. It's really what the statement says, what the changes are in the statement, and then clearly how Miss Lagarde deals with the press later on as well. She's a what's the best word to describe it? She's very polished. She's very professional. She chooses her words very, very carefully. She's a former lawyer, former foreign secretary in the French government, a politician as well. And she's she's really a perfect central banker, if you like. I would argue from a communication point of view. But just while we're here on the Forex Factory Count, if we just look at where we are, and this is what's irking many in the US, in the Fed. We're still, the Fed here still at 450. The euro down here at 415 after 215 after today. The US top of that pile. It's not very often you see the US top of these major central bank interest rate charts. So that is what's getting up the noses of many of the Trump following. So anyway, let's just go quick back to the chart. So dollar remains weak, euros bid here. It's not as strong today, obviously, as we await the data. If we're going to try and trade this, remember we're biased to the upside here on the hourly chart. The 4-hour chart is also biased. We've got big support at 114. That's a 20 period 4-hour moving average chart, but we've been flat the last week or so. We can't get over 114.30 is you can see there on the 4-hour chart. 114.30 is a resistance area. So will they get tested today? And the support is this flat area through here at 114 itself there on the 4-hour. I don't need to put that on the charts, but we'll drill down the time frames. The hourly chart sort of waving about the 114 area, and we're currently trading 114.2. So the data is probably just dropped. And whoops, let's go back to here because this will update. Whereas ours won't, hasn't actually updated. I'm pretty sure that's obviously no change. There would have been a major move if there'd been something of any significance around there. Let's It's delayed. My feed is delayed there. So look if let's go back to the chart. So we're relatively big. So we've got a 5-minute chart. So we are initial reaction was to move us to 114.34, which is interesting. It's higher the day, but the initial reaction here is to the downside. So let's have a look what the statement is saying. So deposit rate cut by 25 basis points to 2%, as expected. 215 for the ACR as we got here. That's all updated. That's yesterday. All the details. So let's have a look at Thursdays. Oh, it takes all those countries back in, doesn't it? Thursday. So 2% as expected. So here we are. So the DFR deposit rate cut from 2.25 to 2%. The marginal lending rate, so the headline figure from 2.4% to 15%, and the marginal lending facility also down by 25 basis points. European yields have ticked a tad lower. It's nothing particularly in that. Let me just see if I can find a copy of the statement as it's coming across my terminal down here. The website is actually still up. Statement coming through. Doesn't look like there's much change in that. It's not loading. Okay, all right. So from the reaction on the immediate reaction here on the currency charts, that might have been guys just playing with the spread and playing with just the noise of the announcements. I mean, some major players, guys, remember, we are very, very small fry in here, but some, the major banks and players are fighting each other, and there's some, if they're arbitraging some of these rates, that's it's not a big move, but you went from 114.34, 35 here to 114.13. So it's a relatively big move on a non-news item. It was very much expected what the ECB is saying, right? Some news is starting to tick through on my ticker here. So measure of underlying inflation will settle around the 2% level. That's, that looks pretty clear as well. It's disinflationary worries really on the ECB. Obviously, with the lowering of the oil price we've seen recently as well, all helps. But that, there was news overnight, Saudi Arabia talking about wanting to increase production again. So that's put perhaps more pressure on that. Just data dependent. That's such a naff phrase, isn't it? ECB will follow a data dependent meeting by meeting approach to determine appropriate policies. Now that's absolutely pat from the last 5 or 6 statements. ECB is not pre-committed to a particular rate path. I keep saying that. So nothing absolutely pat from last time. There's some more details coming through in a minute. I'll wait till that actually drops in my news feed here. The full statement I've just got here. I just got into the ECB bank. The burst interest is currently around the 2% minimum term target. Baseline headline inflation set to average 2% in 25, 1.6% in 26, and 2% in 27. So there's no change there. Downward revisions compared with the March projection by 0.3 of 1% for both 23 and 26. So inflation, as this mainly affects assumptions for lower energy prices and a strong euro. So we've seen both of those things since the March meeting. Staff expect inflation, excluding in energy and food. That, remember, energy and food are very volatile, so they tend to strip them out. 2.4% for 2024, 1.9% for 2026, and unchanged into 2027. In the context of highly uncertain, in the context of high uncertainty, so there's mention of high uncertainty. Obviously, don't say the tariffs explicitly here, so I'm reading it. Higher real incomes, robust labour market will allow households to spend more, together with more favourable financing conditions, to make the economy more resilient to global shocks. So hence the cut. Different trade policies could affect growth and inflation under some alternative illustrative scenarios. These scenarios will be pulled through the staff projections on the website. Under measures of underlying inflation and sorry, I'm just trying to read this really quickly. Brief, the 2%. We talked about that. Target rates, nothing's changed. Asset purchase, the APP portfolios are declining at a measured and predictable pace. There's no changes to those. By looks, things are curious. The Government Council standards just over that. Yeah. So again, that's in summary. The Governing Council stands to ready to adjust all of its instruments with mandate to ensure that inflation stabilises at its sustainably at this key 2% over the medium term to preserve the smooth function of monetary policy within the EU area. The transition protection instrument is available to counter unwarranted. They haven't had to use that for a while across all euro areas, thus allowing the Governing Council to be more effectively deliver its price stability mandate. The President will address the press in half an hour. So nothing in there at all, to be honest, except they've lowered their expectations for inflation. Then there's the caveat about in the context of high uncertainty, they're talking about over trade policy. So that remains fixed. Obviously, the EU, one bogey guy number one as far as Trump's concerned. Well, bogey guy number two after China, from the trade policy point of view, particularly the VAT, particularly the non-tariff type trade restrictions as the Americans see it. But as you can see, very little move there on the euro. If we, if you see our dotted line there, wherever that is, what's that? 114.20. We nothing. That's a negligible move there. I mean, if you've traded that, guys, congratulations. If you've made money on that, congratulations, because it was a very non-effective move. But that's the sort of thing we're expecting, given this panache for the weakness of the dollar. So that's probably going to continue. If we just come out of this and take a step back to those higher time frames we were looking at before, if we go up to the 1 hour chart, there's the impact of the ECB. It's it's less negligible than some of the data we've had this morning. So we're sort of rippling through. That's the word I was looking for. Rippling through 114, and we're at the upside of that through our dotted line here at 114.20. So it's not going to change anything that's said there. It's not going to change this upward momentum. We need a break, substantial break on an end of day basis. This is the 4 hour chart or 4 hour chart to break under this 20 period moving average, and then substantially a break of the 50 period, which hasn't done so far this month. So euro remains relatively bid against the dollar to the upside there. And then if we go up to the daily chart, end of day charts, the guys are just going to out at work. They only look at charts once a day. If you're long this from this initial break here on the 19th of May, there's no reason, unless you got stopped out with that intraday wick there, if you stopped us a bit too close, that you'd be looking to get out of that. And what's that level? 113.45. So if I was trading this on an end of day basis, I've been trending this up. That's where my stop loss would be, 113.45 at the moment, and see where we finish today after the big ECB news. And then obviously we got tomorrow, the key non-farm payroll, the first week of June's over. Are we looking to get to 115, or are we going to come back to this 113.45? Would be how I'd look at that on a higher time-based basis. So let's come back to the hourly chart. So that remains bid. More importantly, our live position is sterling, and that's had a bit of a lift, if anything, on the back of that, which is quite interesting. Got 5 minutes. Yeah, there we go. It's a weaker dollar, as you can see there. Non-related, well, obviously it's not non-related, but sterling has ticked up from this 135.70 zone, and we're at 135.78. It's not massive, obviously, but it's up rather than down since the ECB announcement. We're going to get a bit of volatility now, or quietness now, until Miss Lagarde has something to say later on. So on an intraday short-term basis, our daily high has been 135.84. for cable, and it's 6 pips away still, but there's no reason why that might not have another go at that level if it gets above this next first resistance at 135.80 itself. To the upside, obviously big support of that 50 period there on this 5-minute chart at 135.70, 10 pips to the downside. Here you can see here, nice cross here on the MACD, signal line, green. For the histograms, we're moving up, although the MACD still flat, the signal line's ticked up. And RSI, last 14 periods, rising quite nicely. So to move some more legs in that for cable. Against the yen, 143.20. As I said earlier, the head of the trade, or the key trade negotiator from Japan is in Washington today. Having been moving down all early morning into this 143 zone, we spiked a bit for about half an hour. We didn't get as high as we had this morning, and therefore, now we're coming back down the other way. So again, another demonstration from the announcement from the ECB, the impact from on the dollar. If we just look at the other data that was coming out in a minute, which is the claims numbers as well. So we got initial claims, as we said, 240,000 spike last month. Again, if I just go back to the Forex factory calendar, unemployment claims here, you can see that 240 spike. Did this last week, didn't we? There we are. And each week it's been pulled back down. But again, the point is that we were talking about, like with the jolts coming down, the claims are starting. You can't argue that is. Put a little regression analysis on that for the year over 2025 here, beginning of 2025. That is going up, isn't it? That's definitely trending higher. We've had these spikes to 240 each week, and it's been like bought back, but as you can see, the lows each time is getting higher. So there's certainly some suggestion of the jobs market showing some fractures. Whether it's actually going to fracture, cooling, should we say, or fractures or cracking, not fractures. Let's say cracking. But are we getting to a fracture? Are we going to get a bigger split, a bigger breakdown? Obviously, everybody's hanging on for tomorrow. But again, this could be a natural movement, given that many, there's tightness of the labour market anyway, and then the pressure on migrants not to be there. So from the administration, so that could, inevitably lead to potential more vacancies and openings, and see how that goes. So we could still see a relatively healthy unemployment rate, even though the jobs numbers start to come down. So anyway, we'll see how it all pans out. So more on that tomorrow. Obviously, more importantly is perhaps the relationship between particularly Xi and Trump. Are they going to speak this week? There was chatter earlier in the week that they were going to, then it was off. There was this surprise call with Putin yesterday. Obviously, there's going to be some sort of horrible response from Mr. Putin to what happened to his big bombers on Sunday in Ukraine. So whether Xi Jinping and Trump actually speak this week, there was no. I think it was a Bloomberg feed I saw saying out of China that the negotiations are now at a critical juncture. Critical juncture was the phrase that was translated into English. So these are big, complicated trade deals. They're not the sort of, I would like to buy a golf course. I'd like to build a golf course. I like to build a hotel. These one-off things that the president has built his reputation on. These are, lots of politics involved in that. But he's ripped that rule book up and trying to throw it out the window. So, and he's got many, many believers running with him. Lutnick and Besant, to name but two. So let's have a look what the claims numbers are like this week. So 236,000 are expected, still at the high side, as you can see here, and that's coming across the bending the tables and in a split second. And I'll leave you in peace. We'll have a look at some of the other charts, but I do want to listen to the press conference directly in 15 minutes with Miss Lagarde. Why isn't that updated? Come along. 247. So there we go. That's the high. That's a high for a long time. 247. So that is again suggesting the so the fractures maybe getting to these cracks, or these cracks may be becoming fractures. So 247. Again, if we look at the chart this table won't update, but 247, guys, remember, is up here. So that's the highest weekly. As you can see that very clear, that's the highest weekly initial claims number since this spike week here, October the 10th last year, and that was the hurricane week, or one of the hurricane weeks as well. So that's a significant number. It's higher than this 240 numbers we'd been to 1, 2, 3, 4, 5 times. So that maybe maybe the first piece of evidence that this is maybe this trend here we can see here for 2025 maybe starting to move forward more significantly, moving to the summer months. Obviously last time we were up and now it came down, it came back down to this level, but interesting, that's 247. So that's the highest weekly initial unemployment claims we've seen since October 2024. So that will have put more pressure. So that's a catalogue, that's 3, if you like, hat trick of weak US data. We had the PMIs missing yesterday. We had that ADP significant miss, and then we've had this significant rise in unemployment claims. There's obviously only it's 3 data points all going in the same direction, all looking quite weak. That's probably punctured the dollar again, and there we go. Right on cue. Thank you very much. That's punctured the dollar again, and also probably hit the stock markets as well. So big move against the dollar there. 247, the highest weekly unemployment claims since October 2024. Dollars moved down quite significant, and we see probably quite a significant bid on the bond market. I can't show you a bond market here, but I'm sure the bond markets will have moved on that as well. So initial job claims 247. The 4-week average, let me just go back to our calendar, we see all the details. The 4-week average, let me just update this one again, sorry, just bear for it to run through. The 4-week average is up to 235,000 as well, so that's well, where are we? We'll come back to the ECB in a minute. So the US jobs numbers, where are we? Here we are, continuing claims, existing claims, there we are. So continuing claims, 1.9 million. Remember, it's actually less than it was last week, but the thing is that last week's been revised down as well, but we're still over the 1.9 million level. So that's the key thing that's happened last week. We went over the 1.9 million, which has been revised down by nearly 12,000. That's quite a significant revision. And the continuing claims, those that have been unemployed for 4 weeks, 1.9 million still holds. The 4-week average is higher as well. This 200, sorry, that's the headline, the 247,000. The 4-week average is 235,000, so that's higher as well. Although last week was revised low. I thought I'd gone over 230,000 last week. It was, yeah, 230.750. It's come down by 25,000. So that's a significant number. So it may be a bit of an outlier, but it's a fact is it's nearly 10,000 above the 240. So it's 247, not 240 like that. Yeah, that's more 3 ticks in a row. Productivity is a bit of a miss as well, and the trade balance is actually better than expected. It's not as bad as expected. Interestingly, the trade number, that's quite interesting actually. So obviously we had this massive hit on the pull-in front running the tariffs. It was expected to slip to close to 70 billion. It's coming at 61.6 billion. So that is a bit of positive news. But yeah, unit labor costs much higher as well. So yeah, it's a mixed, not a mixed bag. That's a overall data for the US there. That 1230 data out the US is all quite negative. hence the move against the dollar again, and dollar yen 142, 143 has been busted, 142.86, euro 144.45, so let's have a look at that 144.50 area, I would guess, and sterling, that's helped our dollar trade, our sterling trade, not quite to our target of wherever we were. There we are, 136.18, but we're having a go at 136. So sterling benefiting from that as well. Swissy won. Remember, Swissy is the biggest beneficiary so far since the 2nd of April. 81. How low did we get? Interesting. 81.80. So we're under .82 again. For the Swiss franc here, you can see. So pressured dollar on that weak data. So right, let's have a look elsewhere. Crypto, Bitcoin, you would have thought would have benefited from that. Yeah, we're back over 105,000 here on the 5-minute time frame. Oops, let's go to the hourly. So we've been slipping all week, but it's got a nice old lift on that weak US data. My mouse has just stopped moving. Oh, dearie me. It's having this problem. Bear with me a second. My screen has frozen. Oh, I've got it back. I've got it back. It's not. There we are. So yeah, Bitcoin 105,300. That's had a lift on the week. A dollar. Let's come back to. Oh, come along. I'll go back to my 400s in line for gold, 3,395. So again, go back to the 5-minute time frame on that one. You can see the reaction to the data lifting and then coming back down. Interestingly, there's the 130 US data immediately sold off, interestingly, but in silver also having a really good run. If we just come back to like 2-week high, the copper market, it's moved aggressively this week, at the end of last week and beginning of this week, so it's moving up back to this key 5 level here. That's why I mentioned copper. It's had a really good run this week. It's breaking out on Friday, and the move up followed through this week as well. So I was just going to take us back to gold, and again here on the daily, that 20 days we said before, 3,300 last week. It's holding nicely. Strong day here on the 2nd, on Monday, and we followed through this week, and we're at 3,395 at the moment. Next line in the sand. This is our high here, 3,431 to the upside. And obviously intraday highs took us to within a smidge of 3,500, but 3,400 first line in the sand today, still $7 away, but it's having a relatively good day, as we saw on the hourly chart. Gold today as well, bid to the upside. So let's have a look at what our stocks are doing on the back of that weaker than expected. Just go through them all. So I think we hit our. Let's come down. That's actually hardly moved, has it? It's gone down and then up. If we look at the initial how the stocks reacted to the data, so yeah, so we were lower, along with the lower dollar. So maybe taking some of these off the tables. SPX 500, S&P 500. Spiked lower on the jobs numbers. 5,962 is where we went down to. But we've been back to second target again, or the initial target again this morning. Again, I might close the rest of that. I closed at this T1 half of it. I might close the rest of it as well at that. I'm going to be fed up with that. And Nasdaq hit. It actually got closed out. That it looks like it hasn't hit it there on that chart, but this was at 21,803.94. It was actually the actual target I put in was 21,800, and that got took out. So half of that has been closed as well. The other half is still open from the entry, which is all the way down here. Oh, that's a 5-minute chart. So that's half closed, like we had the S&P 500 half closed. So the entry was here. This goes back all the way to the 27th of May, and that's that, you know, that hiatus day where it was tariffs were on, tariffs were off day, and I wasn't watching it, I wasn't following that through, but we're now back to that area, and we've closed half of that this morning, so that's still half open and still pushing to the upside for the Nasdaq. The S&P didn't get to its line in the sand target up here. So that, sorry, it did, yeah. So that's say I haven't. That isn't an automatic closeout, so I think I will manually close that one out as well. And then Nasdaq and the Dow is the weakest performance of them all. That's our new target area from the 27th. So they're the only open positions. But I have a quick look at my end of day strategies. On the back of the ECB story, so we're still long cable from that. Remember 136.18, 136.12, I think is our target on that one. Currently, CAD Swiss looks like it might tick off Swiss CAD, but that was yesterday as well. Nothing happened with that. Euro, similarly, Euro, Aussies are all from yesterday, interestingly. Dollar Yen looks like going to take a short position tonight on that potentially. Stop loss is 100 pips away. Yeah, see if there's any more legs in that to the downside when the markets close or closing later on. Aussie Euro Oz, this is from yesterday as well, so it's moved forward. It's it's got a bigger stop loss now, so maybe looking a bit more juicy, that one. Euro Oz. Swiss yen, similar sideways action, but it's movement to the downside. It's bounced a bit today. It was down yesterday. Looked like it was going to trigger yesterday. It didn't. It's bounced up today, so I'll have a look at that later on as well. And CAD Swiss is the other major one as well. But again, it's a really sideways market, CAD yen. But we may be looking to move higher if we interesting where we are at the moment. So we're at 59. 98. So if we get over the 60 area, there might be another 60 pips in that potentially, but it's pretty boring CAD Swiss from a trend following sort of trader, so I'll probably not take that, to be honest. But anyway, that's potential trades for this evening. The more aggressive strategy is Aussie yen, CAD yen, Euro yen, and pound yen. So we'll have a look at those as well. What's the pound yen one doing? Is it short or long? It's long this time, so it's been, again, it's chopping around. So pound yen potentially long, Euro yen potentially long. So weakness in the yen is what my strategy is suggesting. Aussie yen's a bit more interesting potentially. But stop loss is a bit too close, I think, at the moment. It's 35 pips for a 30 pip gain, maybe. Again, a bit sideways action, but yeah, a bit of weakness in the yen. My forex strategy is picking up at the moment, but again, it's only it's not even 2 o'clock here in the UK. Right, I'm going to go because Miss Lagarde is on the docket and on the microphone and the screens. And I'll be interested to see what she's got to say, because we could have some significant movement in something she's saying. The DAX, I should have mentioned this earlier, we hit a new all-time high this morning at 24,400. So the DAX is benefiting from it. And unsurprisingly, the DAX also retested its all-time high in the last hour on the back of actually the ECB and the US trade data. There we go. In the last 15 minutes, in fact, we've been back up there. It's a 15-minute chart there for DAX. So thank you for your time today, guys. If you're looking to open an account with us, please do. We're here to help you. If you use if you use the evaluation area, if you're new to us, you get a minimum discount of 25% on any of the challenges. If you've got a few $100s to spare, have a go at a $50,000 account. They're standard at 345. You put in SC25. SC25. This is now working, I was told this morning. Oh no, it's not. I'll have to have a word with new 25. I think it's working. There we are. Gives you $86 discount. So for $250, gets you $50,000 worth of equity to play with. And you stick to the rules. 5%, 8% profit target. That's all. 5% in step 2. If you don't keep your losses to your maximum of 5% overall, a maximum of 10%, 5% on a daily basis, you don't want to be getting anywhere near those sort of levels, guys. I know it's very easy to do, and most people still blow up. But prove it with these simulated accounts, and you've got some real money available to you. You get your fee refunded, and if you use one of our pro accounts, these are the standard accounts. If you use it on pro accounts, this profit share goes up to 90%. Or from 90%, and profit share from 80% if you've got a standard account. If you don't want to do the two-step challenge, I know lots of people like the express challenge. It's a higher target because you're only doing one step. That's 12%. Daily loss is a bit tighter, and maximum loss is a bit tighter as well. So be aware of what the rules are. There's no rush in this. Lots of people run into this trying. Oh, I'm only interested in the express challenge. They tends to have higher targets, higher risk potentially, tighter. Therefore, you got more pressure on you subconsciously. Remember, it's all about your mind, really. Successful trading. And again, people get really hung up about this minimum trading days. I want to do it in 3 days. I want to do it in 2 days. What if I do it in 2 days? And well, no, 3 days. You do it. If you hit it in the first day, you still got to, keep the account ticking over days 2 and 3. But why not do it slowly, gently? 3 weeks, 3 months. It really is up to you. How you're doing this. But if you're doing it properly, you can just repeat it and scale up your account. And 200,000 accounts are there to be had. Okay. All the very best, my friends. I will see you tomorrow for non-farm payroll. Very interesting. That's the third, in summary today, that's really the third piece of weak data in 2 days out of the United States, showing signs of vulnerability in the jobs market. The PMIs, remember PMIs, the services numbers yesterday, they're forward-looking the PMI data as well. That's the other key thing about that, although they're only sentiment data. So, yeah, tariffs, uncertainty more than anything. Rather than the tariffs themselves, might be the uncertainty around the tariffs starting to bite. Okay. See you all tomorrow. Take care, stay safe, and as ever, my friends, may the pips be with you. All the best.